What's going on, guys? So this one is going to be a simple one. I'm going to knock out two things, and it's how to open a trading account and three types of analysis. A lot of people think there's only two types of analysis, but there's actually three. So first, how to open a trading account. It's honestly really simple. Once you decided on your broker, you're going to select an account type. And, there's different account types that I'll go over. And for registration, you just have to literally put your email, your name, and just simple verification stuff like check your email, click on the link, and just activate your account. Now, a lot of brokers will let you trade demo before you verify your account. Not all brokers have you verify your account, which is another thing that you guys need to think about. Some brokers that don't have verification processes seem to just not necessarily be shady, but be unprofessional sometimes, make mistakes. And when it comes to money, you don't want to make mistakes, and hopefully they don't want to make mistakes. So try demo first on the brokers and see which one feels right. At the end of the day, demo is free money and it's live market conditions. So you can literally do whatever you want, mess around, use a 10 lot, see how that affects it, use a 0.01, just train your eye. And once you get into live trading, you're going to be able to be skilled and just think of it as normal trading. Now for account types, account type business or personal is referring to when you sign up, who is the person, okay? Who is the person that's opening this FXCHOICE account? Is it a business or is it a person? And the second thing is choose a live Forex spot account, not futures or forwards. So, and a lot of them are, for FXCHOICE, for example, it's called Live Pro ECN. That's what you want, okay? A live account. That's ECN is usually what I recommend, because it goes through all the processes rather than two, like we discussed before. And, just choose a Forex one. Now, with a lot of new brokers adding cryptocurrency and commodities now, you have more options, which is really nice. And then you can choose a leverage. Now, we talked about leverage in the first level of Forex University. And essentially for leverage, try to have, you can do really whatever you want depending on the risk you want. I usually go around 200, 300, around that area. I don't like to go 1,000, and I don't like to go something little like 100 or 1-to-1. For registration, like I said, you are going to probably have to verify yourself, which that's a good sign that you're having a good broker. And, also just make sure to, check out all the associated costs, like the hidden fees, bank wire transfers. Some brokers offer a rebate on that, while some don't. Some even don't even charge it, which is, crucial. Like I said, activation, once all those steps have been completed, you'll receive a final email with username and password and how to fund your account. Once you fund your account, everything should be good. Just follow the brokers. Most brokers are really simple. But one thing I do want to emphasize is that I want you to trade for at least 65 days. Now, before you start, thinking, oh man, I want to hop in, I want to make money now. I'm telling you, save your hard-earned money now by doing it brokers, by doing a demo account. Now, a lot of you are going to come in with the strategy that I'm going to teach you, and you're going to literally start making, 100, 200, 300 pips, 400 pips a week. And then just 2 weeks in, you're going to be like, oh, I'm ready for live. And that's just not the case. And, if you don't want to listen to me, you can do your own approach where you lose your hard-earned money. But if you want to listen to me, you are going to save a lot of money. Don't do anything risky. Literally trade as if it was real money. Open a trading demo account with something realistic, 1,000, maybe a couple thousand. So I see some people entering with 100,000 demo and then, using 1 lot, 2 lots, 10 lots. And then once they go with live, they only have 500 and they're using the same lots, and then they lose everything. Or the 0.02, 0.03, even though it's the same ratio, it's not the same amount of dollar profits, the same pips, they're, not satisfied. So at the end of the day, I chose 65 days because psychologically speaking, humans, when they do everything for 67 days around that area, it actually forms as a habit where they naturally continue to do it rather than, doing it intentionally. So it's kind of nice when you transition to live, you're going to be like, oh, this is demo, you're not really attached to it, which I'll hop into the level 3. You'll understand more about the psychological aspect of things and the mentality. But hopping on to the 3 types of Forex analysis, there's technical, fundamental, and sentiment. For technical analysis, you're basically going off history. You ever heard the saying, history repeats itself? That's what you're using when you're doing technical. Now, I teach you how to do trend lines, zones, Fibonacci, EMA, all that in the level 3 course, and how to actually draw up the charts and everything. But essentially, you're just predicting the movement of the market based on numbers and previous, price action. Fundamental, it's just based on economics. If, say, Donald Trump is having a speech that's important or a new election, Fed rates, NFP, non-farm payroll, it's the first Friday of every month. That's when the USD, goes crazy almost every time. If the outcome of the country is good, then the currency would rise. If it's bad, then, the currency would drop. Just based on economic news. Now, sentimental, a lot of people actually, forget about this. It's basically opinions on the market by the majority. Now, so how I try to view this is that a lot of people think that if they have, a certain amount of money that they can move the Forex market, and there is no way, no shot. Even if it's not like stocks where you're the only shareholder and you dump a lot of money on it and, it starts rising and a lot of people hop in. That's not the case. This is different. This is, if you think the dollar is going to go up, but everybody else thinks it's going to be bearish, you're about to lose your money. This usually is correlated with fundamental and technical. So, when it's everybody, a lot of people draw the same zones, draw the same trend lines, but what makes you different is crucial. And you got to be aware of, okay, everybody's selling here, but in reality, everybody's selling here. So what that means is, it's going to continue to try to hit everyone's stop losses, which I'll explain in version or level 3. And that way you're prepared for the market. But I'm ready to see you in the next one. Take the quiz, and I hope you did good.